Hey guys, welcome to our weekly news show here on Backstage with Millionaires. I'm Caleb, your host, and today we're going to be talking about Harley Davidson India's survival strategy, Tata's plans to acquire BigBasket, Amazon's small victory over Future Group's acquisition by Reliance Retail, Paytm Money's new investment product, Airtel's cloud communications business, all of the latest funding news and more coming up right after this. All right, so first up in the news, Harley Davidson is back in India. Well, they never really left, but they're deciding to stay. So last month, they announced that they were going to be shutting down their sales and production operations in India after their sales continued to decline from 4,780 units to 2,470 units between the financial year of 2016 and the financial year of 2020. However, in a last-ditch effort to survive, they changed their mind and decided to partner with India's leading motorcycle manufacturer, Hero MotoCorp. Under this new partnership, Hero MotoCorp will be in charge of designing and selling premium motorcycles here in India under the Harley Davidson brand. Apart from that, Hero MotoCorp will also be in charge of selling things like parts, accessories, merchandise, riding gear, and apparel for Harley Davidson. This decision to partner with Hero MotoCorp is part of Harley Davidson's global restructuring plan, as they're planning on exiting loss-making markets and have decided instead to focus on markets like the United States, Europe, and parts of Asia Pacific. Talking about changing their business plan in India, Gochin Zeist, who's the president, chairman, and CEO of Harley Davidson, said, "We're exiting about 40 markets where low volumes and little profit do not warrant investments. We're establishing dealer direct or distributor models in about 17 markets, and our 36 highest potential markets will have the leadership, resources, and clearly defined operating framework that we believe will derive desirable growth and profitability in the future." All right, next up in the news, Tata Group, according to media reports, is in advanced talks with India's only online grocery delivery unicorn, BigBasket, to acquire up to 50% of the startup for $1 billion, that's 7,440 crore rupees. It's expected that Alibaba, which owns about 26% of BigBasket, will be looking to sell their entire stake. Now, neither BigBasket or Tata Group has confirmed that these talks are happening, but if this deal were to go through, then it would essentially double BigBasket's valuation, and it would also put Tata in direct competition with already existing players in the online grocery delivery market here in India like Amazon, Flipkart, and Reliance. Tata has already announced its plans to launch a super app before the end of this year, and so if they do end up acquiring BigBasket, then this could definitely help them to strengthen this super app through inorganic growth. So we're gonna move on to the next news item in just a second, but before we do, I have a fun little announcement. We've just recently launched a Discord server. So if you wanna become a more active member of the Backstage with Millionaires community, I would recommend that you head over there now and join the conversation. There will be a link to that server in the description down below. And if you haven't already subscribed to our channel, and I know a majority of you guys who are watching this video right now have not subscribed, make sure to do that right now because we post new videos every single week about Indian startups, entrepreneurs, and the latest news. Also, go check us out on Instagram because we post news items there every single day. All right, next up in the news, about 2 weeks back, Amazon had approached Singapore's International Arbitration Center, claiming that Future Group had breached the terms of its contract with Amazon by agreeing to sell its retail business to Reliance Retail. And it looks like, at least for the time being, Amazon has been victorious in this endeavor. The SIAC has ordered Reliance Retail and Future Group to put their deal on hold until they can form an arbitration panel. This means that if Reliance Retail and Future Group were to obey this order, then their deal worth 23,713 crore rupees, that's $3.4 billion, would be stuck. But it doesn't look like Reliance Retail is going to be playing by the SIAC's rules. According to them, no matter what the Singapore International Arbitration Center decides, they're going to move ahead with the deal without any delay. And they're doing this because they believe that under Indian law, their deal with Future Group is bulletproof. So if you haven't been following this story very closely, then you might be wondering why Amazon is so keen on stopping this deal from going through. So allow me to fill you guys in. With more than 1,500 stores across India, Future Retail is India's second largest offline retailer next to Reliance Retail. And when it comes to Reliance Retail, Amazon sees them as a threat because they've started to acquire a pretty sizable chunk of India's online retail market as well with the launch of JioMart. Now, in the beginning, JioMart started as just an online grocery platform, but over the course of the last couple of weeks and months, JioMart has started to rapidly expand, and they're essentially now a full-blown online retailer. So if they were to acquire Future Retail, they would be a serious source of competition for Amazon. At the moment, Amazon is already having a hard enough time competing with Flipkart. And so if Reliance Retail is successful in acquiring an even larger share of India's online retail market by acquiring Future Retail, then Amazon is in danger of losing a huge chunk of India's online retail market. And they've spent billions of dollars just to acquire that chunk of the market in the first place. All right, next up in the news, online investment platform Paytm Money has launched ETFs after receiving approval from the Securities and Exchange Board of India, that's SEBI. An ETF is essentially a collection of securities. These can be a collection of stocks, bonds, commodities, or a mix of all three. ETFs, like mutual funds, offer the benefit of diversification, but they also offer the ease of trading that traders enjoy with stocks. Users investing in ETFs can invest as low as 16 rupees in equity, 44 rupees in gold, and 120 rupees in Nifty using Paytm Money. With this new offering, Paytm Money is looking to add 100,000 new users, that's 1 lakh new users, onto their platform over the course of the next 12 to 18 months. Talking about the launch, Paytm Money's CEO Varun Sridhar said that ETFs are investment avenues that everyone should add to their portfolio to earn index and market-linked returns at a lesser cost. We are offering a user-friendly interface along with necessary factors that the user may need to make an informed decision and invest in ETFs of their choice conveniently. All right, next up on the news, India's largest mobile telecom company, Bharti Airtel, has marked its entry into the quickly growing cloud communications business with the launch of Airtel IQ. Airtel IQ is a cloud communications platform that enables enterprises to seamlessly communicate with their customers across multiple channels, including calls, SMS, and mobile and web apps. While Airtel IQ is still in its beta phase, a number of Indian tech companies like Swiggy, Just Dial, Urban Company, Havels, and Rapido have already signed up as customers. This platform is definitely going to help Indian startups to enhance their customer experience by leveraging Airtel's vast network to offer real-time personalized communication across multiple channels. According to Airtel, India's cloud communications market is estimated to be worth around $1 billion, that's 7,440 crore rupees, and it's growing rapidly at 20% annually. And so Airtel is very well positioned to capture this emerging opportunity by benefiting India's growing startups, which are in desperate need of a seamless customer communications platform. All right, moving on to some funding news now. FreshToHome, which is an online retailer of fresh vegetables and meat, has raised $121 million, that's 900 crore rupees, from investors like Investcorp, the Investment Corporation of Dubai, which is an investment arm of the government of Dubai, Ascent Capital, the US government's Development Finance Institution, that's DFC, Alana Group, and Iron Pillar. And I think it's worth noting that this is the largest Series C round ever raised by an Indian consumer tech startup. Founded by Shan Kadaval in 2015, FreshToHome sources its vegetables and meat directly from Indian farmers and fishermen. FreshToHome is already processing more than 15 lakh orders, that's 1.5 million orders, every single day, and they're clocking an annual revenue run rate of $85 million, that's 632 crore rupees. Apart from India, FreshToHome also operates in the UAE, and they're planning on using these fresh funds to expand their operations in India to places like Kolkata, and to also expand into new international geographies like Saudi Arabia. All right, next up in the funding news, online video editing platform InVideo has raised $15 million, that's 112 crore rupees, in its Series A round from investors like Sequoia Capital India, Tiger Global, Hummingbird, RTP Global, and Base Ventures. Founded by Sankit Shah and Pankaj Chedda in 2017, InVideo offers a web-based video editing tool that enables enables users to create professional quality videos using templates, images, and a music library. The startup claims to have more than 800,000 users, that's 8 lakh users on its platform, who have created videos in more than 75 languages. With these latest funds, InVideo is looking to strengthen its video creation product suite by adding the ability for users to collaborate, and they're also going to be building a mobile app for its web-based platform. Alright, next up in the funding news, B2B e-commerce platform Jumbotail has raised $11 million, that's 81.8 crore rupees, from investors like Nexus Venture Partners, Pimpernel Holdings, Heron Rock, Jumbo Fund, City Capital, and Reaction Fund. Founded by Karthik Venkateswaran and Ashish Jinha in 2015, Jumbotail is helping 30,000 small Kirana store owners to source their products from its platform, while also offering warehousing, supply chain, payment, and credit solutions to help them grow their businesses. The startup also helps these Kirana shop owners to turn their offline businesses into online stores within 24 to 48 hours with their J24 brand. The startup is going to be using these fresh funds to expand their core B2B marketplace to new geographies in India, and they're also going to be expanding their network of J24 stores while also growing their private label product portfolio. Alright, that is all the startup news that I have for you guys this week. I hope you enjoyed the video, and if you did, make sure to hit the like button and also subscribe if you haven't already. Thank you guys so much for watching this episode of Backstage with Millionaires, and I will see you in the next one.